I want to bring in former Reagan economist Art Laffer. There you are. He is with us this morning. Art, this is an emotional word, trade war, and that's what's taking the market down so much first thing this morning. What's your position here? Do you approve of the president's strong stand right from the get-go?
No. I think Charles and Ashley are wrong. They're wonderful people. They're very smart, but they're wrong on this. If you look at it, China is our natural trading partner over time. Their comparative advantage has exactly been with China. I was the first person in modern times to go to China. I went with George Shultz and John Ehrlichman in October of 1970. This is a wonderful country that's growing rapidly to catch up to the rest of the world. Now, I'd like to make two things about trade wars, if you use the word that way. Every time we've had a major trade war type of thing, 1922, 1929, 1974, all of these periods have been huge drops in the stock market. All the times we've had freeing of trade, Clinton, under Reagan, under the 20s, we had huge rises in the stock market as well. You know, these things are very, very important for us.
Let me jump in, Art.
Yes, sir.
I got to jump in. Number one, these are proposals. There is not a trade war in terms of tariffs on this and that on both sides. That is not happening. It proposal, and we're still talking.
And but secondly, everyone starts with proposals.
How do you stop China ripping off our technology and our intellectual property? Because we should do that.
You don't do it by shooting yourself in the foot. You know, our trade barriers hurt us as well as China.
But how do you know that negotiations are not going underneath the surface to get rid of this intellectual theft and this stealing of technology?
I talked to the president on this, exactly on this topic, and that's what he said he was trying to do, was get the negotiations. If it works that way, God bless him, we'll have a bull market like you've never seen when that's done. And I really trust this president very much for wanting to negotiate. I think he is a free trader. I think he really wants to make this happen in the correct way. I am terrified, however, by the threats and by the counter threats of putting on tariffs. As you can see, you're following the markets. You said it very clearly. Exactly when China announced the counter tariffs, the market collapsed 500 points. That's the type of stuff that we don't need going into the midterms, Stuart. We don't need it to mess up the politics of the U.S. Now, after the midterms, if you want to do a little bit, maybe then, but goodness gracious, it has. Xi does not have midterm elections. We do.
Okay, we clearly have a difference of opinion around this table and wherever Art Laffer is. I think he's in Tennessee.
Nashville. I am.
Nashville, that's the good place.
Can I chime in 1 second?
Charles Payne has 20 seconds. Go.
The U.S. stock market is no longer a pure proxy for the U.S. economy. Art's right. A lot of these stocks we see in the Dow Jones Industrial Average are making profits overseas. Doesn't mean anything to the U.S. worker sitting at home right now without a job.
You told me that about 1930s, Charles. You told me that true. And I'll go with you. 1974, I was there. I watched it. Charles, you're wrong. Once this thing starts, it then feeds into the main economy. That's where it is. It has a huge catalytic effect.
I'm not saying there won't be any short-term
pain,
but I think that we must make a stand now to prevent us from being way second in the future.
All right, everybody, got to wrap it up. Charles Payne and Art Laffer. Oh, I hate to break up a good debate, you know, but you know, sometimes you have to take politics. I'll call it round one.
Someday.
I'll call it round one.
Yes, you do.
All right, thanks, Art. Thanks, Charles.